Hey, Alex Yao here, Remax Select Properties and realestate.com. And this is Real Estate Matters. We're in March 2024. Over the last month, in February, there has been quite a few more listings on the market as, of course, spring is coming soon, and prices have been ticking up a little bit. It's starting to uptick a little bit. Rates have remained the same at 5%. That's the Bank of Canada federal rate. And we are still expecting it to start dipping down, probably towards the middle of the year now. Aside from that, we do have quite a few things to go over today with all the policy changes in regards to the provincial budget and all that, and how that affects you. So stay tuned. I'm going to be reading a little bit from my screen here, so I just don't want to miss anything. Bank of Canada interest rate held at 5%, as we just mentioned. Next announcement is going to be April the 10th. Rate drop is still expected, but probably delayed as inflation is still kind of hovering around 3%. We're looking for the April announcement to start hinting at the drop. Even in the statement that came in on March the 6th, the government mentioned that 5% was still at kind of a high of 5% to cool down the rates, the inflation even more. So they do know that it's high, and we are expecting for it to go down. Home insurance rates, I wanted to talk a little bit about that. A lot of people don't talk about this, but home insurance rates actually went up 7.63% in the province over the last calendar year. That's still going to be going up again. So I'm expecting some investors probably to start selling. These are typically in the 1 to 2 bedroom condo markets. And I think that will really hinder some of their cash flow. So that might come into effect. A few things happened with the new BC budget. So here's some information. First, BC home flipping tax is starting January 1st, 2025. This applies to properties that were purchased and sold within a 2-year period. Profits will be taxed even if it's a primary residence. Second, first-time homebuyer property tax exemption. This used to be based on the market value of under $500,000. Now, those prices are hard to find these days, as you probably know. So this threshold is going up to $835,000. However, the exemption is still the same, as the first $500,000 of property transfer tax will be fully waived for qualified first-time home buyers, of course. But the additional sliding scale up to $835,000, at which point the full property transfer tax will apply above $835,000. So this starts on April 1st of this year. Another thing that starts from April 1st of this year, newly built homes, including pre-sales, property transfer tax exemption threshold is going up from $750,000 to $1.1 million. So for qualified buyers, purchases of properties under $1.1 million will be PTT exempt, so there won't be any property transfer taxes. However, GST will still apply at 5%. It's still higher than the property transfer tax, but you are saving the property transfer tax below that point. So do your due diligence and make sure the math checks out. With these three new things, what does that mean? So let's take a look at each one in a little more detail. I'll give you my thoughts. BC home flipping tax prevents buyers from selling within 2 years of ownership. Now, with some exceptions, but overall that may reduce the supply in the market, causing prices to actually organically rise. BC government statement is that this would reduce flippers and cause prices to rise. However, we know that the price is only what someone's willing to pay. So a singular or even a small percentage of sellers wouldn't be able to move the needle with the market moves. I chalk this up to be a political move, and it probably wouldn't have much effect on the market. Second thing though, the first-time homebuyer property tax exemption raising from $500,000 to $835,000. This would have a little bit more effect on the market, if not for the higher interest rates, but we know that that's about to go down. Now, however, since most 1 bedrooms and some 2 bedrooms are within that threshold, combined with the rising insurance rates and low mortgage rates, and the low mortgage rates about to expire with some of the owners currently, I'm expecting the market to pick up in that price range, under $835,000. In that price range where the 1 bedrooms, the first-time home buyers and all that, they're going to be trying to take advantage of this PTT exemption. and of course, sellers will be looking to sell. So that will probably be a pretty active market. Now, the third thing, newly built homes property transfer tax exemptions, thresholds raising from $750,000 to $1.1 million. Pre-sales have gotten quite expensive, of course, relative to resales over the last 7-8 years or so. This would definitely help, but would I invest in a pre-sale today? Probably not. Price per square foot is still much higher, combined with the volatility of the market. It's still a little too risky, and I'm pretty risk averse for those clients that know me well. But for those that just want something new to live in, this will definitely help. Will it affect the market much? Probably not. So these are my thoughts on the new budget implementations. So let me know what your thoughts are. Now, as I mentioned in the last video, I wanted to not only provide some quantitative information in these videos, like we just done, but also provide some qualitative value as well. I was asked a question a couple of weeks ago by a client and thought, this is a great question. It's something that's often overlooked, but I do get asked it quite a bit now that I think about it. The question usually from newer clients, so the question is, what's the difference between a new versus an experienced buyer, seller, or investor in the real estate market? So I thought that was a great question because while most people look for the difference in the products they choose, this actually looks at the behavior and the mentality differences between the two. So, of course, I've had years of experience dealing with hundreds of clients. So it's quite glaring, the differences between a new buyer, seller, investor, or an experienced one. It's mostly the why. Why are they doing something? And it's not, newer buyers, sellers, investors tend to focus on the dollars and cents or the cost, whereas the experienced ones focus on the revenue. We can't really alter the market in any way. We can't say, okay, your one bedroom, which is worth $700,000 today, I can't sell it for $850K for you today. We can't do that, but we know how to take advantage of any market. So experienced buyers, sellers, and investors are the same way. It's not about the dollar amount they want to sell at. It's the timing that they're focused on. They know we can't dictate the market value, but when the time is right, they'll take the best offer there is, whatever that is. And a little bit of money here and there, either way, is not going to really move the needle for them. Timing is the key. It may mean that they'll take the equity out and put it in a high interest GIC when the market is flat. It may mean that they'll upsize when the market is down or downsize when the market is up. By the way, if you want to know the logic behind that, please feel free to reach out. Anyways, back to the topic. An experienced buyer, seller, investor would typically not worry about the small stuff, the dollars and cents, and focus on the goal instead. They're also less emotionally vested, even if it's their own home. They understand that this wasn't their first and likely not their last either. Sellers can't control the market value, just the same as buyers can't buy a single detached house in Vancouver for under $1 million. It just doesn't happen. It's just not where the market is. It's the value proposition of the transaction that the main difference is. It's not the dollars and cents. I need to make this much. I need to do that. No, it's they focus on the trend. They want the money to grow with the trend. If it's not doing that anymore for them, they'll let it go and do something else that'll give them that. Another small tidbit I wanted to add regarding experienced investors. When do they like to sell? Obviously, when the market's up, it's great. When they make money, it's great. But there's actually a time that a lot of investors like to sell. That's when the stock market is down. And that's because the losses they incur in the stock market can offset their capital gains in the investment properties. So at the end of the day, they're actually pocketing more money. So anyways, I thought that was pretty interesting. They use real estate essentially as a hedge, if you will. All right, that's it for the month. If there's any additional topics or questions that you'd like addressed, feel free to let me know. Reach out to me. Love to chat. And if I can help you with anything in the next month, just buying, selling, investing, give me a call, 604-374-5534. And we'll see you next month.